That indicates to me that that high was at an area that was not strong resistance. So here's what I want to do. I'm going to take a trend line, and I'm going to draw it back in time. Okay? Back in time across the chart. Make it horizontal. And what I'm going to do is sort of scroll back a little bit, and look at this. Look at this. Now remember, these points weren't on the screen, right? I couldn't see that. I just drew the thing. Okay, I admit I could see that one. Okay, but look at this. I drew a horizontal line off of this high. Look at this. We had consolidation there at this price area. Here. Now let's go up to a 4-hour bar. I mean, look at this. Wow. Wow. Okay. Now that's a good sign. Meaning, here's what I mean by this. It's a good sign, meaning there are a lot of hits on this line. So 94.34, 1.9434, watch for short. Because you can see here that the market was not able to sustain above that line even with all this momentum. I mean, look at how fast it came at that line, and it couldn't hold it. Okay? So that's going to be an area that I want to watch for short, which means I'm going to be looking for, let me go ahead and scroll back down. We'll go into an hourly bar now. What that means is, as the market comes up into this area, what I'm going to be looking for is the market to, maybe even break above it a little bit, and then start to do what? Consolidate right down into this line. Alternatively, what I'm going to look for is the market to trade significantly lower tomorrow, and then come up and start forming a flag or a pennant underneath it. If the market forms a pattern underneath, I'm going to be thinking to myself, you know what, this market's probably going to break to the downside, but I'm going to be open to either direction. Okay? If the market forms it above the line, I'm going to be thinking, this market's probably going to break to the upside, but I'm going to be open to either direction. So, let's go ahead and write that down for our plan. Watch, I've got 1.9434. Watch for short if pattern appears under the line. Watch for long if pattern appears above the line. It's that simple. Okay, so now I have a very specific plan, don't I? I have a specific plan for how the market is going to deal with this area. Now you may be thinking to yourself, yeah, but what if it does this? But what if it does that? But, get your butt out of the way. Okay, your butt is only going to get you in trouble. I have no earthly idea if the market is going to break this line here, trade up, and give me a nice pennant. I have no idea if this market is just going to scream to the upside tomorrow. I mean, this thing may shoot up, here. This thing could, do this and just boom, 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 and be up here at 9,600. I don't know, but I have a plan. I have a plan, and I'm watching for the market to form a pattern. I just thought of something which I would normally be doing it, but I just thought you should probably also write down, watch for double top, watch for Fibonacci retracements, watch for tunnel. Okay, and what's a tunnel? Tunnel, remember, is the market making an equal move like this. Look at that. That was a nice pattern. Basically, just to give you a refresher, a tunnel pattern is when the market moves from a point A to point B, and then you have an equal move. So you take this first move from A to B after the market's done retracing, and you tag that on, and the market has a good chance of retracing once it gets to the end point. That's all that means. So I want to watch for a tunnel. I want to watch for Fibonacci's. Here's an example of that. This retracement here, I'm going to watch for Fibonacci extensions. 127.2, 161.8. You can see the market blew through both of those. Delete those off.